What's up, and welcome to Budget Breakers. I'm here to share real-world financial stories to help you learn how to get out of debt, build wealth, and live an amazing life. Let's get started. Confession number 1, secretly pay off debt. My husband and I both had big spending problems. I did all the work to become financially literate, took courses, read books, and educated myself on all the things I'd never heard of. Worked out a budget and figured out our debt. Cut out all of mine and the kids' expenses that weren't completely necessary. And it turns out we have $15,000 in credit card debt. I've spent months trying to get him to understand that we have negative money and he just can't go get fast food or a new phone or a new game or subscription or whatever he wants. What I ended up doing was doing a balance transfer of all the debt to our lowest APR credit card and then cut up all the other cards. Debt was almost to the limit of the card, so there isn't much wiggle room to buy anything on that card. That has reined him in on his spending because there literally isn't anything to spend. It's eased my anxiety about the money situation, but I have a lot of anxiety about how much we're paying on interest every single month on this $15,000 balance that we're carrying. I want to get rid of it, but not get rid of my husband thinking we don't have money to spend, which we don't. I'm about to acquire $70,000 in a trust until I turn 25 in a few weeks. I really wanted to preserve it for a down payment in the future, but I'm thinking I really need to draw money from it to pay off this debt so I don't keep spending thousands on interest. I'm thinking about paying off the $15,000 secretly and not telling him so he doesn't resume spending thousands of dollars we don't have. Is that wrong? Technically, it's my money and my card. He doesn't have access to either of them, but it's partially his debt. Well, first, it sounds like you'll have a spending problem, which you've acknowledged and you've started to take steps to fix that. The issue with this right now is you and your husband are on two completely different sides. You're supposed to be acting as one team together for yourself, for your marriage, for your kids, for your family, and saying that it's partially his debt or it's technically your money. It is y'all's together. The debt is y'all's together. The money is y'all's together because you're married. You're working as one team. And if you start having his debt, her debt, my money, his money, then it's going to destroy your relationship and financial future. Is it bad to secretly pay off the debt? From a financial perspective, no, it's not. But from a relational standpoint, yes. Hiding big financial decisions from your significant other is going to lead to losing trust and hurting your relationship more than it is helping. What it sounds like you need to do is go to counseling, get your husband on the same page. I don't know how you do that, whether it's you go and but y'all need to get on the same page about your plan, about your future, about your money. And then, yes, I'd be using this $70,000 to pay off this debt and lock the remaining amount away in a high yield savings account. When it comes to credit card, pay off this debt and then cut up the credit card. You do not need a credit card. You have bad spending problems. He's had those problems. You've had those problems. And keep $1,000 in your checking account, the rest of it in a high yield savings account in a separate account, and do not allow you to use money except on your debit card. But y'all need to get on the same page. Y'all need to be working through this together. Otherwise, if he finds out you pay off this debt a year from now, 5 years from now, it's going to lose a lot of trust and cause a lot of marital issues. Confession number 2, is 1.5% management fee too much? My financial advisor charges 1.5% fee on my Roth, rollover, and personal account, and returns are less than my 401k. Should I roll my funds over to less fees? The beautiful thing is you have plenty of options out there. Whether you want a robo-advisor or you want to learn how to self-manage, you have plenty of options. 1.5% fee is astronomically high, but platforms like Vanguard, Fidelity, Schwab, Betterment, Wealthfront all have robo-advisors that are 0.2 to 0.25% if you don't want to do it yourself. Or you can learn how to invest yourself in index funds, broad market funds, and a lot of those funds have between 0.02 to 0.1% fees on those. You need to educate yourself. You need to fire this financial advisor and figure out where that money is going moving forward. Confession number 3, what should I focus on most right now? This year, I really started taking my personal finances seriously, and I'm trying to figure out what is the best course of action. I make about $3,000 a month, and that's before taxes. For the last several years, I've dealt with credit card debt I accumulated due to poor choices, and I consistently owe back taxes as well because I'm always catching up on the previous year. Thankfully, my debt is starting to look better as I paid off my credit card debt. Now I have one personal loan for about $2,000, about $1,000 left for last year's taxes, and I have $1,100 in my emergency fund. I also have just under $10,000 in student loans. My payment for that is $110 a month. I thought is to focus now on the taxes, pay them back before the end of the year, and start saving more aggressively, throw more money at taxes for 2023. I think I'll make the minimum payments on the loan, which have about a year left, and the student loans would be about $305 a month for both of those. I also want to beef up my emergency fund and get to at least $3,000, but it feels like I'm far from that. Anyway, what advice would you give for my current financial situation? First, you need to be setting aside money every single month since you're working as a contractor and self-employed for taxes. So if you're bringing in $3,000 a month, save 25% of that in a separate account solely for taxes. So that'd be $750 a month going into that separate account so that next spring when tax season comes around, you don't have to go scrambling for money. You don't owe the government money. You don't have to take out a loan with the government for your taxes. That is first what you need to do. Second is send them a budget to figure out where your expenses are, what can you cut back on. Then you start figuring out paying off this debt. Yes, I would go the snowball route here and pay off last year's taxes, about $1,000. Then once you get that paid off, go after this personal loan that's $2,000. Then after that, go after the student loans that are $10,000. Start setting aside money for taxes now for next year. Don't wait. That's why you continue to find yourself in that situation. 2, budget your money, build out your plan for paying off debt using the snowball method, and then stick to your plan. Continue pushing forward. What are part-time jobs or more hours you can pick up as a personal trainer to bring your income up? Confession number 4, investment advice. Should I sell my dividend portfolio to help with my credit card debt? About $20,000 in credit card debt due to being out of work for 6 months last year from breaking my wrist just about in half. My ex-girlfriend didn't help with paying most of the bills, and I was stuck paying the majority without income. This caused me to blow through about $8,000 of savings and rack up over $20,000 in credit card debt. This included medical bills, car repairs, and day-to-day living. I make about $1,800 to $3,000 a month depending on my tips at my job. I've been putting heavy payments down and have been able to get my $25,000 in debt to $21,000 in 4 months. I have $10,000 in my dividend portfolio. I just sold off $5,000 of it to bring my total debt to around $16,000. I'm wondering if I should sell the other $5,000 off and just build it back up where I'm not longer chained to this debt. What should I do? Well, you have already learned or already taken action, but your dividend portfolio is not going to outperform credit card debt. If your credit card debt is at 20 to 30% interest rates on it, and the average return of your investments or the stock market is 8 to 10%, you are losing money, keeping money in investments and paying off credit card debt. So if I was you, I would sell the remaining of that dividend portfolio, pay down that balance, an additional $5,000. Obviously, you have to account for taxes if you have any capital gains, but I would pay that off, get yourself on a strict budget, and figure out your plan of action to pay off the remaining $11,000. Confession number 5, which debt to pay off? I need a spacious vehicle. I have about $18,000 in credit card debt. My monthly income is $7,000. My credit score is 745. I have a mobile home I want to rent out, but it needs money put into it. Any advice? I'm in the market for a new vehicle, and I have a few credit cards that need to be paid off and a land payment that has a mobile home I've been remodeling to rent out that I pay about $4,000 on. My lowest balance on a credit card is about $1,300, the highest about $7,000. All in total, about $18,000 in credit card debt and $4,000 left on the land payment, $400 a month at 12.9% interest. As my wife and I now have a new baby, I want to upsize our vehicle and get rid of one of ours. A few months ago, I paid $30,000 on the principal on the land since I was paying $400 a month and only about $200 or something went towards the principal. So I knew I needed to spend the money. I was left with $4,000 left on the principal. I was able to save $13,000 and want to figure out what would be the best way about getting rid of debt, but at the same time to buy a more spacious vehicle for my family. Should I pay the smaller debts first? Should I save about $5,000 for a down payment on the vehicle? Should I pay off my higher balance cards? Should I use the money to finish remodeling the mobile home? About $6,000. I need some advice. So first, no, you don't need a new car unless it is putting your child at risk, unless it's a 2-seater car that doesn't have room for you, your wife, and your child, but you already have 2 cars in your family. So you do not need to go and buy and finance a new car when you have 2 working vehicles. And you have $18,000 in credit card debt. I would take this $13,000 and start paying off this credit card debt immediately. What I would use on your shoes is pay off the credit cards from smallest to largest. So the $1,300 credit card first, whatever the next one is next, and work your way up, the snowball method with the credit cards. That should leave you about $5,000 left on the highest balance credit card and $4,000 left on the land. And then figure out a plan to paying those off as quickly as possible in the next few months. But please do not go and finance a new vehicle just because you want a more spacious vehicle. That is the worst thing to do, is get yourself in further debt when you have $18,000 of credit card debt when it is unnecessary. Confession number 6, best option for a $9,000 loan for home improvement. I got a quote for a home improvement and it's going to be about $9,000. I have a few loans out with a bank, so I figure I could just up my credit card limit and purchase it with that and slowly pay it off. Come to find out, my credit card has an APR of like 27%. Doing some digging besides taking out another loan with the same bank or other banks, and I came across taking a loan out of your 401k. This option seems like the best route, but I thought that with a credit card at first, so now I am asking around. Is it typically a good move to use this route for a smallish loan? Or is there a better low-interest option for a loan of this size for home improvement? HELOCs is a unique, interesting option, but basically I'm in the slow purchase of a family house and I don't currently own the home I'm in. So I'm not sure if I qualify for a HELOC without being the full homeowner yet. So there's a few issues with this. One, if you're looking to do home improvements, you need to save up cash for it. You cannot afford to do fun home improvements on a home if you can't pay cash for it. There's no reason to take out a HELOC to remodel, to renovate, or anything on the home. Please do not do that. It's terrible. Second, why are you spending $9,000 on a house you don't own? I don't care if you're slowly purchasing it. If your name is not on the house, if you don't have a mortgage on the house, you should not be spending $9,000 on a place that you rent. You need to have a conversation with a family member who owns it, and this is what they should fix. If it is a required AC unit going out or something, that is the responsibility of the owner of the property, not you. The worst thing you can do right now is go finance $9,000 for a home improvement thing for something you don't even own. So please do not do this. Thanks for watching today. If you learned something from this episode of Budget Breakers to help you improve your current financial situation, please hit the like and subscribe button below. The best way to support America getting out of debt is to hit this like and subscribe button to help the channel grow and help more people find us to learn about money, talk about money more, and build wealth. Thanks so much for watching. We'll see you next time.